But there is what I call the pivot crowd. So the Fed pivot is a narrative, and it kind of goes like this. Yeah, the Fed's tightening. We see that. But inflation is going to come down really fast. The economy is going to slow down really fast. Both of those things are happening. Inflation, a little less so, but the economic slowdown is there. And the Fed's going to get the wake up call and have to cut rates. And cutting rates, that's the pivot. They're going to pivot from rate hikes to rate cuts. And that's good for tech stocks. So buy stocks. Um, Now, that's the narrative. It prevailed in late July and most of August. The stock market did go up. There was a decent rally in the middle of what's become a bear market, based on this Fed narrative that they were going to have to cut rates maybe in December, early January, et cetera. There are two huge fallacies in that narrative. The first one is, who says the Fed's going to get the message? And if you look at what Jay Powell said in Jackson Hole on August 26th and what he repeated in his Washington press conference on September 21st, September 21st was like, hey, for any of you who weren't listening to Jackson Hole, let me repeat it. Okay. We're going to raise rates. We're going to crush inflation. We know there's a recession. He didn't put it in quite so many words, but you don't have to be, you don't need a decoder ring to see what Jay Powell was saying. I've been following this for 50 years. I've never seen a Fed chairman use the word pain 3 times in one paragraph, but he did, and he meant it. And so then he kind of doubled down on that in September 21st in the press conference. So he knows there's going to be a recession. They're causing it in part. Unemployment's going to go up. He said that, and really September more than in August, he tied unemployment to killing, basically demand destruction and getting inflation under control. He said that's how we're going to do it. And you're already starting to see some early signs of that. So if we're so with that as their focus, who says the Fed's going to get a wake up call in December, January? Almost certainly not. I mean, they told us what they're going to do. They're going to raise rates in November. They're going to raise them again in December. They're going to raise them again on February 1st. That's the first meeting in the 2023 calendar. At that point, you're at 4.25, maybe 4.5, or even higher in terms of the target rate for Fed funds. And then he said, if we see progress on inflation, we'll pause. But pause doesn't mean cut. It means just wait a long time, because at that point, core PCE, that's personal consumption expenditure, core, which excludes oil and food, and that's just how they do it. That's their favorite metric. You can debate whether it's the best one, but the debate doesn't matter because that is the one they use. Let's say that comes down from about 6.5, where it is now, to around 3.5. Okay, it's still not 2. Now, what Powell, which is their target, so what Powell said is, we don't have to keep raising rates to force it to 2. We just have to raise them enough that it'll get to 2 on its own. That's what they call restrictive policy. So, but that's not a rate cut. He said that might last for a year, all the way into 2024. That's when he was talking about rate cuts. Now, again, this can change, but they've told us what they're going to do. I always say, forecasting the Fed's the easiest thing I do, because they actually tell you what you're going to do, what they're going to do. You just have to listen and believe them. Now, the hard part is understanding how badly they're going to destroy the economy and when they're going to get the wake-up call. That's the hard part of the analysis. But telling what they're going to do is the easy part, because they kind of tell you. So the stock market notion that somehow they'll be cutting rates in next winter is just false. But the second fallacy is even bigger. Is tell me why it's a buy signal for stocks if the Fed is throwing the economy into such a bad recession that unemployment is going to go up significantly and growth is going to come down, inflation is going to come down. Why is that a buy signal for stocks? Maybe at the bottom, and the bottom might not be till late 2023. Okay, we'll talk about that next year. There are opportunities to buy the bottom, but we'll be nowhere near the bottom. And the stock market, again, so the August rally was based on the pivot narrative I just described. The September collapse was based on people saying what I just said, which is, hey, that narrative doesn't really make sense. The Fed's not going to cut rates. And then, of course, the sledgehammer on September 21st. And so, this is the beginning of October. Yeah, there was a rally, a 2-day rally. Bear market rallies are really Interesting. Some of the biggest rallies in history have been in the middle of bear markets where you ended up losing everything, but for a couple of days or weeks even, it's hey the bottom's in, and you buy stocks, et cetera. So you have to watch out for that. So my expectation is the recession's coming. It's going to be really bad. Inflation is going to come down fast, but not quite fast enough for the Fed. They're going to keep raising rates into early 2023, destroying demand, raising unemployment. And we're going to wake up this winter, although you can see it coming today. We're going to wake up this winter with a severe recession, high unemployment, and a much lower stock market.